Okay.
All right, couple of things as we get ourselves underway. You'll be aware.
NCO.
You'll be aware that there is a certain decision that is apparently going to be being made today that may or may not have implications on us all. Okay? And if that happens, we will deal with it. Right? It might be that we have to do, obviously, the virtual learning for everybody. Okay? Or it might be, and there's a chance of this, and Mr. Griffith raised this again today, all right, there is a chance that it will be that we won't have to, but other people will, and it might be that certain parents then say, because of our situation, we want you to be home, you know, that sort of an idea, okay? So whatever happens, we will deal with it and we will cope, okay? But it does mean that you're going to need to, if we are going distance learning, again, you are going to need to make sure that you are keeping up and asking questions and all of the usual sorts of things that you would expect to do, but a little bit harder because you'll be doing it from the distance, okay? I've posted in the classroom the link to the Nearpod, so if you could jump in there, that would be fantastic. It is EQRAF. All right, where we last left off, you were working collaboratively. You were building up a Google Doc. You were answering all of these questions in your Google Doc. I did suggest that it would be a really good thing for you to have done by today. So, you know, hopefully that would have been good. All right, but one of the first things that I'd like you to do today is going to be a bit old school. And for this, you are going to need a pen device. So I don't know if you have such a device anymore. I know they're very old. They look like this. It's called a pen. You write with it. Pencils are okay. If you do not have a pen but have a pencil, if you have neither, yeah, that's not a pencil. That's an entire tree there. If you don't have such a device, if the technology of that has failed you, has passed you by, there may be one or two floating around here that you can borrow. All right. Now, I've got this. You can do this at home yourselves. All you need is a pen, right, that you write with, and a piece of a dead tree. Here's one. All right. I made them bright colors because
So what do we have to do?
I show it funny.
Oh, okay.
All right. Right, now, on said paper, here's what I'd like you to do. I would like you to fold it in half, like so. So therefore, you should have two clearly definable halves. All right? Don't worry, it's not origami. All right? Okay, well, you can if you're that way inclined. I had a year 13 who was very good at origami, and she would sit in class. Sorry? Year 13. And she would sit in class and every now and then do a little origami bird and just leave it on the desk. Right now, on the left-hand side, I would like you to do a list of the functions of money. On the right-hand side, right-hand half, left-hand side, right-hand half. You're going to have functions of money down there. You're going to have features of money down there.
Wait, so half function like here?
Yes. All right. Try not to use your notes. Try to do this via the power of Grayskull between your ears. Okay. Then what I'd like you to do is to have a look at what the others in your team have done check and compare, and if you've got one that they haven't got, if they've got one that you haven't got, then you can add. If you've put a function where you should have put a feature, if you've put a feature where they should have put a function, etc. All right, so have a go. Functions of money down one side, features down the other. I need to remember something for you. Just remind me if I forget. Done. There's once you've got as far as you can have a look at the others, see what they've got, check and compare. Once you've got that far, can't go any further, then have a look at your notes, check and compare, add what you're missing. Functions and features of money work really well as multiple choice questions. They also work quite well in some short response questions. And the understanding that they give you helps you in your extended response. All right, give you a few more minutes.
It will keep changing it. Like examples of like, okay, I'm going with this framework. Yeah. Yeah. Medium of the change. Means of the unit of what? Unit of account. Means of the medium of exchange.
All right. Now, hopefully that's quite a useful exercise just to get your brain going again. And it's also quite a good review strategy. Something as, I was going to say basic, it's not the right word. Something as low skill as definitions. Okay, there's no explanation needed. There's no application needed. It's just defining. Okay? So by being able to do this, you get that first rung on the ladder, that first skill set of definition, okay, or identification, in other words, and you're able to then carry on and then perhaps start thinking about, okay, now I've got all of these, now I need to be able to explain what they mean. So what does it mean that it's a unit of account? What does it mean that it's a means of deferred payment? Yeah. And from there, you can start evaluating potential government policy. So if the government was to increase the amount of money in the economy, what would that do? Yeah. It would make it substantially less scarce. Right? That might have an impact on the value of money, which means what you're able to buy with it may not be as much, right, as previously. Right. Now, as said, very good multiple choice questions, functions and features of money. Quite a common area for learners to get confused between the difference between a function and a feature. All right. Another good learning strategy is obviously sort of the paired, right, checking of each other's work, okay, and the discussion that comes from that. Now that's difficult to do if we're doing that online, quite clearly, okay, but not impossible. All right. That brings us on to the next section, the idea of banking. Now, you might know a bank or two, but are there more than two?
Yes.
Do you know all of the banks in Malaysia?
No.
I know
Most. I know
most.
different countries.
You know some from different countries? Good.
Same. It has disease.
Do we know there's a bank in Malaysia beginning with the letter R? Yeah, RHB or something? Yeah.
RHB, yeah.
All right, there's a bank in Malaysia beginning with the letter M.
Maybank. Maybank is Malaysia.
What other banks are there in Malaysia?
Islamic Bank.
Yeah, yeah. Public Bank,
Hong Kong Bank.
Hong Bank,
Citibank.
Citibank, yeah.
Lot of banks.
So there's quite a lot of them. So we're not going into this assuming you know nothing about banks. In fact, you're probably quite conversant in understanding banks, right? You've possibly been in a bank. You may have your own bank account. Yeah, maybe. So we're going to be thinking about these two ideas principally. Right? We're going to be looking at the difference between what's called a central bank and what's called a commercial bank. Commercial banks go by different names. Sometimes they're called retail banks.
Oh.
Right? And again, it depends on the country you're in. Right? But also it depends on the book that you're reading as well. Some of them are commercial banks. Some of them are retail banks. It's basically meaning the same sort of thing. So there's some banks up here. Again, some of which you will have heard of. some of which have been in the news, like JP Morgan Chase. Okay, quite often in the news. Citigroup, you might have heard of. A number of American banks in there. In America, they went by this tradition of naming their banks like 1 and 2. So the first bank and the second bank and the third bank and that sort of idea. Yeah. So you see here, here's the fifth third bank. Yeah. Now, what other countries do you know that there are banks in? What other banks do you know of?
The NBK, National Bank of Kuwait.
Okay.
There's HSBC.
HSBC, yes, Hong Kong.
OCBC, which is Singapore.
Yeah.
And then there's a Chinese bank.
Oh yeah.
Yes, there's a few Chinese banks.
International Islamic Bank.
Yes. Okay. Anybody know the names of any Chinese banks?
Chinese.
Surprises me because some of the biggest banks in the world are Chinese banks.
Oh. Oh, ICBC is
Hong
China.
Leong? Yeah, is that Chinese, Hong Leong?
ICBC.
ICBC.
HSBC is technically China.
Yes, good point.
I've seen
Yeah.
Oh, you never happened of China.
So, and again, you might have gone into a bank. I actually haven't been inside a bank in Malaysia.
Oh, really?
No.
They shouldn't, because the ATM thing sucks.
Yeah. I definitely used ATMs for sure. But here you go. Quick question for you. Aha. Trivia fans, those of you who do the pub quizzes. ATM stands for what? No.
Account or something.
You're on the right path. It is automatic.
Transfer.
What do you call a person who's behind the counter at the bank? Huh? Old-fashioned word for a person who's behind the counter at the bank.
Automatic teller machine.
Automatic teller machine. The person who's behind the counter at the bank, in the old days, was called a teller. All right. I'm guessing that's what happened when you turned up wanting money, is that they had to tell you something. So that's why they called them the teller. All right. I am the teller. I will tell you how much money you have. And so therefore the machines, when they came out, because they didn't have, I don't know, any creative thinking about it, it was just an automatic teller machine. Yeah, not a money dispenser or, I don't know, whatever else you could call it. These are different. These are not commercial banks. These are not retail banks. You would definitely not set foot in one of those. If you did, you might get arrested. All right? These are not banks for you, but they are banks. So if you have a look there, you might recognize some. All right, Bank of Japan, Bank of Canada, the European Central Bank. Sometimes people just say ECB. That's the British one. Reserve Bank of India. Yes.
Bank of New Zealand.
Well, in New Zealand, commercially, in New Zealand, Australia basically owns all of the banks. All right, so there is one bank that's a New Zealand bank, well, kind of two. All right, and the one bank that's New Zealand is called Kiwi Bank.
Kiwi Bank.
Go figure. All right, pretty much the rest of them are all owned by Australia. Yeah, Australia owns about 90-something% of all of the banking and insurance industry in New Zealand. Right? But yes, in New Zealand, there is a Reserve Bank of New Zealand. Now, what we need to see is that sometimes the words that get used are different but mean the same thing. So we've already discovered that this could be called a retail bank as opposed to a commercial bank. we tend to say these are central banks, but we can also call them reserve banks. All right, so in case you see it written differently somewhere else, those are interchangeable words. So you see here, Reserve Bank of Australia, Reserve Bank of India. Where's this one? Bank of Japan. Yeah? Right. So these are the banks that you would deal with personally. Right? These are the banks that somebody else deals with. Who do you think deals with these banks?
The government.
The governments.
Let's
So this is the government.
go.
This is the individual. Right? These are your individual banks that you might deal with, and these are the government banks. Yeah?
So like a private school and government.
Yes, kind of, but on a much bigger scale.
So is that like a private, like, what's it called? What's the word called? Business?
Can be,
Not
yeah.
investment. Not investment, there's a word for it. I forgot what's that word. Never mind.
Now, we're going to see a bit more detail about what this all means, so let's have a wee look. Here we go. What is it that you think commercial banks do? Right? Based on your experience of banks, what do they do? Just list as many things as you can think of that banks do for you. There you go.
I was, oh.
The heart of the thing is different shape. Size. What do banks do? Banks are a very useful form of employment for bankers who work in the banks. But what else do they do? Work on it. See what else you can come up with.
I don't know, man.
Oh, good one, Tracy. You've come up with something different. Good. Work, Charles.
Yeah.
Yes. No, you said too rude. Explain yourself. Oh.
Okay, still waiting on a couple to add some thoughts.
Explain yourself.
Good work, Isaac. You've added something different. That's good.
What is this? How always believe me. Yep. Yes. Hello, you here?
Okay, just a couple more weighing on.
I don't know
And so. Right, that's enough. Okay. Right, okay. So you remember the other day that we talked about how in the past it was the job of banks to actually print money.
Yes.
Well, nowadays they don't. But they do a lot of the things that you have said, which is really good that you've come up with all of this, because remember you have experience with banks, so you know this. All right, they do give out loans. They do allow you to store money. They can transfer money good between different accounts and different banks. They can do credit card management, yes. Interestingly enough, for those of you who are familiar with credit cards, you also have to understand that credit cards are actually owned by a different company. Yeah. Right? So the Visa company is a separate company from the bank. Yeah. MasterCard is a separate company from the bank. Yeah. Which means that there can be some issues with that, depending on how that goes. I don't know what increased deployment means. I've got no idea. Make transition, not sure. And so. Lots of so's. What's going on there? Let's see. Help you pay for stuff. Okay. Provide financial services. Very good. Yes. And one of the things that they enable you to do, or that they can do, is they can give you advice with regards to your finances. You can walk into a bank and say, I've got this money, what do you think I should do with it? Some banks will also sell you insurance. Not every bank, but some banks will. So the life insurances, the contents insurances, some banks will sell you that. Store money, yeah. Yes, good. Okay, all right. And banks can also help you with investments as well, potentially. So as we said, commercial banks, they're also called retail banks. They're actively a business. They are trying to make a profit. One of the ways that they're going to make a profit is by charging you fees. Yeah? Okay, that will be one of the ways that they make a profit. Yes, they'll be basically trying to keep your money safe. They will be offering you a loan. In fact, sometimes quite freely offering you a loan. Sometimes it's quite scary just how easy it is to walk into a bank and get a loan. They will be the people who help you to get credit cards. Not every bank has a credit card. Some banks operate just through the Visa system and the MasterCard system. But other banks have their own credit cards they operate and run. And mortgages, which we talked about before, I think, which is a very big loan, usually to buy a house. So they offer you all of those sorts of services.
Wait, hold on. Sorry.
Some banks also have what are called safety deposit boxes. Not every bank again. And in those, you can keep special items that you have that you want locked away, like precious jewelry, I don't know, famous paintings, I don't know, right? Whatever it is that you've got that you don't that you're worried about safekeeping at home, you might put into a lockbox, a safety deposit box in a bank. Right? It's important that you remember that it's there. Okay.
Okay,
Otherwise, it can be a bit of a problem.
thank you.
Right? So commercial banks, they're businesses, they're trying to make a profit. And one of the ways they'll make a profit is by charging you for their services and by putting fees onto the services that they give you. Why do we need them? Well, as you already worked out, banks provide you with funds, like loanable funds, but they can also provide investments. Right? They're able to also, commercial banks deal with businesses. So it's not just the individual consumer, it's also the business who puts their savings, their money into the business. And they can give you advice, as said, but they can also give a business advice about how best to use the money that they have. If there were no banks, right, how would businesses make and receive payments? They'd have to, I guess, go back to cash or bartering, maybe. If there were no banks, how would a business store their revenue? What would they do with it? They'd have to have it like a little box, I guess. Yeah, and the manager takes it home with them. Maybe gets robbed or her. Right? How would it pay for its business premises, the rent on its business? How would it do that? And what would happen to the costs of having to run that business if you were also having to manage your own money? Yeah. In the past, and I know you're thinking this is crazy, but in the past, as an employee, you used to get paid in cash. All right? Now, most employees these days get paid electronically. But in the past, on payday, you'd queue up to HR, get your little envelope with all your cash in it, and then there'd be this big track of people like little lemmings, right, down to the bank to deposit their pay slip, their pay into the bank. And it used to be, you'd have a wad of cash and then also some coins, which was really awkward, right, in this little envelope, plus a pay slip explaining how much you'd been paid, which you had to keep a track of to make sure you were being paid the right amount. It also meant that businesses had to store all of that money on premises, right, under lock and key and all of those sorts of things. And it was quite a risk, as you can imagine. In the supermarket, we did have one of our managers at one point steal, right, the money. He got caught. We had security cameras put in. He got caught on camera stealing the money, and he got asked to leave. All right. Okay. Yes, he then went to go and work for one of the supermarkets down the road, okay, which we didn't mind because they were a competitor. If we don't have banks, then we've got to manage all of that ourselves. And businesses have to manage all of the cash that they deal with themselves. And that then adds an awful lot to their costs and stress and worry, etc. Now, I can remember walking out of the supermarket with my little wallet of money the supermarket had given me, wandering down to the bank to deposit it. It was a pain. Then when we switched over to electronic transactions, it was like, I don't have to worry about that anymore. It's all gone straight to the bank. Now, central banks are different to commercial or retail banks. And as we said, you're not particularly likely to step inside a central bank. It is possible in a way. You can go to the central bank's museums, but typically you don't step inside an actual central bank. So here you could go to the Bank Negara Museum. And it's actually quite interesting. Well, from an economics point of view, it is. But the actual workings of Bank Negara itself, no, you can't go in there. Yeah? There will be armed guards out the front. There will be all sorts of people, right, security-wise. No, you just can't get in. What do central banks, remember they're also called reserve banks, what do? Well, they've got certain key functions as well. The first being, they're the ones who print the money. Okay, so again, another reason why they don't want you in the shop, in the store, in the bank. You've got printing presses going, you don't want you near it. Every now and then you'll be able to see like video footage of a central bank and the printing presses and how they make their money. There is quite an interesting video about the US and the printing presses that they have, where they have these massive sheets of paper with all of the banknotes on them. They go whoosh through the machine, and then it cuts them all into the individual sizes, all of that. That is quite an interesting process to see. But yeah, they would not let you in the door. Okay? It is far too big a risk. They're the ones who issue, so that's your first one. Central banks are the ones who issue the money. Right? Now, usually the government has some discussion with them about that. All right? And there will be discussions about the layouts of the notes, the patterns, the pictures on them, you know, all of those sorts of things. Point two, that they have to ensure, a very fancy phrase, ensure the stability of the banking system. One of their jobs is to be basically the banking cop. All right, so there you have the Bank of Yassen, right? They haven't been behaving themselves particularly well. Yeah, they've been lending too much money to everybody. Yeah, so the central bank has to come along and go, naughty, naughty. Yeah, don't do that. That's what they have to do. And it is quite an interesting idea that the head of the central bank goes along to these banks and they have actual meetings with them and they're telling the CEOs of these banks off. Naughty, don't do that. Yeah. They've actually also got legal power to deregister banks. Right? They can destroy banks if they want to. Because they're the cop, they're the police, they are representing the government in that regard. The third one, and this is one that has proved time and again to be very important, particularly at the moment. They are what's called a lender of last resort to commercial banks. If the bank starts to run out of money and go, oh dear, what do we do? Okay, they can borrow the money from the central bank to keep them what's called solvent, to keep them with money. Yeah. So Isaac turns up to the Bank of Yassen and says, can I have my money, please? And the Bank of Yassen says, oops, well, we've loaned it already, it's all there. And then they say, oh, wait one moment. And then they go online and they download a line of credit from the central bank and they're able to add that to your account. Otherwise, what would happen to your faith in that bank? Yeah. You would start to panic about the safety of your money in that bank. Yeah. Now, by rights, if you have deposited money in a bank, you can ask for it back. It might be that you lose, interest by demanding it back, but it's your money. So you can ask for it back. What happens, though, if everybody asks for their money back all at the same time? Yes, the bank breaks. Now, there is a German word for a broken bank. Does anybody know it? Bankrupt. It quite literally means broken bank. All right? The word rupt is where you get the word rupture or break, and then bank. All right? Bankrupt. Okay? So they can save banks, and there are really fascinating histories of banks that have collapsed over the course of the world. Yeah? Some amazing ones, and scenes of people charging at banks because they're worried that their money's going to go. And they'll run at the banks and they'll basically smash down the doors of the banks to get their money out. Yeah? Panicking that they're going to lose it. Yeah? Then there's this one, which again at this time is very important. Central banks are also a lender of last resort to government. So not only does Yassin have to bail out, or get bailed out by the central government, the central bank, but he also himself, the central bank, has to bail out the government. So if the government starts to run out of money, the central bank comes along and says, here you go, here's some money. Now, how often do you think that happens? Not very. More often than you'd like to think. At the moment, a lot. In pretty much every country around the world.
But does the government have to pay?
Yes, in theory, yes. But in practice, it's the government. Yeah? All right. Now, you might be familiar with a country called America. Yeah? They owe like about 18 or 19 trillion dollars. Okay? They recently spent $2 trillion on their economy. They didn't have it. They borrowed it. Now they're looking at spending another trillion or so because they need to. They don't have that. They're going to have to borrow it. Now, you might be familiar with another slippery country. All right, Greece. You've got to watch the floor with Greece. All right. Now, Greece ran out of money. And a whole lot of people, and borrowed a whole lot of money. And then those people who lent it the money, particularly Germany, said, hey, we'd like our money back. And Greece said, yeah, don't have it. Central banks, ride to the rescue. You might be familiar with the situation called 9/11. What happened then? Yeah?
I believe a terrorist group sank 2 planes into 2 particularly large buildings in the US somewhere.
All right, they did. What happened immediately following that? The US stock market, the US banking system went whoosh like that. Yeah? Central bank to the rescue. Anybody heard of what was called the subprime housing market collapse in the US? You heard of that? The housing market collapse in the US? It's a few years ago now. It happened. All right. Here's a little bit short breakdown of what happened. Okay. Americans were borrowing money. Not a big surprise, but some of the people who were borrowing money didn't have a job. They had no prospect of getting a job. They were just being given money by banks. Okay? And they were going, yay, woo, we can afford a giant car, right? And the bank then all of a sudden worked out that at some point it's going to need its money back. Well, how do you get that from somebody who doesn't have any income and is not going to get any? So then what they did was they said, well, there's so many of these people that we're worried that our bank will collapse if it gets found out that these people don't have any money and we've lent the money. So instead what they did is they bundled up all of those loans into like a little package and they sold all of the loans on the stock market. All right? And they sold those loans to investment companies. One of the big investment companies was a retirement superannuation scheme. And it was trillions of dollars worth of debt. Not a small amount, trillions of dollars. Now, of course, it's like, a balloon, a bubble. Right? Eventually, some significant shock happened, like a pin pricking the bubble. Okay? And all of a sudden, the emperor had no clothes, and everybody was going, how on earth are we going to find this money? Nobody had any money. The banks didn't have the money. The insurance companies didn't have the money, and they were guaranteeing the banks. And all of a sudden, bank after bank after bank started to collapse. Insurance company after insurance company after insurance company started to collapse. And the American economy started going, all right? And then one of the biggest and oldest businesses in America rang up the central bank and said, we've got a problem. we currently don't have enough money to pay our staff on Monday. And it was like Friday. At that point, the central bank said, oh dear. So the central bank went to the government and said, if you don't stop this problem now, the entire US economy is going to collapse. All right? To give you an idea as to how fast things were spinning out of control, they eventually put a stop, right? But in half an hour, they'd lost so much money that if it had gone on any longer, the US financial system would have gone. That's how fast the money was evaporating from their economy. Bank after bank collapsed, and eventually the central bank started lending huge amounts of money, an unreal amount of money to all of the banks, keeping them going, yeah, and the businesses and the government, keeping everything going. And it's one of the times again where the US Federal Reserve, because that's what it's called, saved the world. Yeah, because at that point in time, there were only 2 countries in the entire world that were not affected by the scandal. One country was Russia. The other, well, 3. The other country was North Korea. And the other country was Australia. They were the only countries. Every single other country was hit by this. Right, because it was what's called a financial contagion, kind of like a pandemic, but for finances. It went all around the world. All right, and the next bit here. So, number 5. Monetary policy. The central bank, when it talks with the government, they're the ones who set interest rates. So, you know, you go to the bank, you deposit your money, they give you an interest rate. Yeah? Okay? You go to the bank, you borrow money from them, you have to pay them back with interest. It's the central bank who decides, more or less, what that interest rate is. All right? And by doing so, they are able to manipulate the economy. If they want you to spend less, they increase the interest rate. They want you to spend more, they decrease the interest rate. And by doing so, they're able to have a huge control over the entire economy. Reason why they're able to do that is basically because of this. As soon as the government said, you are the ones who will be printing money, it meant, well, we've got all this power. All right? As soon as these banks said this, it gave them all this power. So they can do a lot in the economy. There are 5 functions of the Reserve Bank, 5 of them. There were 4 functions of money. There were 5 functions of the central bank. You can imagine a multiple choice question asking you about the functions of a central bank. And that's again an identification question. And it will come in handy very, very soon. Right, so how do they work? Let's have a look. Let's have a bank. Now, if you're good at, do you need more paper? I'm going to do a drawing. You can use the back. If you wish to copy this down, I am not an artist. Let's put that out there. I am married to an artist. I am not an artist. All right, are we ready? Mr. David's incredible artwork. Here we go. Let's have someone. Here we go.
Whoa.
There he is.
Whoa. Wow.
Is it Darwin?
No, it's not.
Is it Darwish?
Oh, Doris? That's Doris.
There he is.
No, he has that Kim Jong-un hair.
All right, okay. You've got to have fancy clothes.
Whoa, look at that fancy clothes, my guys.
All right, there he is. Yeah. Now, he's got $100.
Ooh.
Right, now then, what bank are we going to choose?
Wait, do you want like retail banks or
Retail bank.
and I don't know, CIMB?
CIMB. I'm going to guess the B stands for bank.
Yeah. Central something. International.
Right, so what happens is Darwish deposits his $100 into the bank. So the bank has that $100. Right. Now he is guaranteed to receive some interest on that. He might get a ringgit back at the end of the year, maybe. Woo, score. Yeah. But then, of course, more fancy clothes. Right, you've got Isaac.
Yeah.
I don't know, is there two S's or two A's? Two A's? Because some people it's different. Right? Now, Isaac wants to set up a business, so he needs to borrow from the bank. So he wants to borrow $100. All right, he's got to then repay it, all right, with interest. Now, of course, this is the way that they can earn money, because there's going to be a difference between this interest rate and this interest rate. Yeah? So because they're charging Isaac more than they're paying Darwish, they're making money. Right? If they hold on to this, they don't make money. But if they loan it out and collect it back in, right? Then there's Bank Negara. I think that's how you spell it. All right, Malaysian Central Bank. Now, CIMB, they're going to deposit money with them. Might be $100. Easy number. So they have that $100. Okay, and it's just sitting there so that they can claim it back at any stage. All right, so Darwish turns up to the bank, oh, I want my $100 back. They go, oh dear, we've loaned it to Isaac. Oh no. But they're able to claim the money back from here. All right, they earn interest there from them. So again, there's another interest rate there. And they've got to work that that interest rate is different from this interest rate and that one. All right?
Oh,
And they try and balance their accounts out that way.
awesome business.
Yeah?
Cheaper later.
Then, if they decide to borrow, they might want to borrow $1,000. Okay? They have to repay with interest through Bank Negara. There's another interest rate there. So Bank Negara control this interest rate and this interest rate. And because they control those two interest rates, it then has a flow-on effect to influencing this interest rate and this one. Yeah? So if they set their interest rate, wants to sell me property. I don't want to buy it. If they sell their interest rate at 4% here, yeah, then here, so here, they're probably only going to get 2%. Sorry, 2%. So they've got to make a difference. Right, and here, they might charge 6%. Right, so they're making more than they're paying. They're earning, right? And they're paying out less than that amount, so that they're making a profit. Now, if you consider Australia, which has also got some of the biggest banks in the world, some of their banks are some of the most profitable in the world, making billions of dollars a year. Billions of dollars a year. And that's part of the way that they do it. All right? And they're also going to charge you fees. So if Bank Negara wants there to be more money in the economy, one of the ways they can do it is by making that less. Then it's worth less for the bank to save it there, so they're more likely to loan it here. Yep. Or here, this interest rate here, they could change that and decrease that as well to 3%. And then the bank's more likely to borrow from them. Okay? Now, the reason why they have that power, as said, is because this bank wants to put the money in there. And this bank puts the money in there. And this one puts it in there. And this one puts it in there. And this one. And this one. How many banks did we say there were in Malaysia? A lot. They're all putting money into Bank Negara. Right? Now, you, the individual consumer, probably don't have a lot of money in the bank. Yeah? But imagine some of the businesses that are operating. They do. Right? Some businesses are going to have millions of ringgit in the bank. They're going to have to. But the bank doesn't want to sit on that $1 million worth of ringgit, because that doesn't earn the money. So they're either going to loan it out and charge interest back, or deposit it here. Now remember, what was one of the other functions that these guys had? They were also able to print money. So they can also then just go cha-ching, and there's more money in the market. And that money floods into the bank. And the bank loans more of it out. And then the consumers go and buy more. Now, this is how the Malaysian government has kept the Malaysian economy going during this current crisis that we're in. This is how the American government has kept the American economy going. This is how the New Zealand government, the Australian government, the UK government, they're all doing it. Because if they didn't, their economies would crash. And we don't want that to happen. If the American economy goes down, so too does the rest of the world. All right, it is that connected. To give you an example, remember I talked about the housing, yeah? Right, there's a movie about it, by the way, but the only problem with the movie, if you watch it, just bear in mind that language and or content may offend. So if you're watching it with mum and dad, just be aware, okay, that there's some real strong language in it. Okay? Particularly when banks start collapsing, you can imagine people get a bit excitable, okay, and start to be quite verbal on the telephone about their feelings. Okay? So, where was I? Yes. Where was I? The housing market. Thank you. There was a dinner in America, and the governor of the US Federal Reserve was at the dinner, the guy in charge of it, and one of the people who was at the dinner was the Chinese ambassador. And the Chinese ambassador walked up to, quietly, just on the side, walked up to the US Federal Reserve guy and said, hey, just a minute. We have been asked by people who shall remain nameless, Russian, to all of a sudden ask for our money back. All of the money that we've loaned you, we've been asked to ask for it back right now. Okay? Because if they were to do that, given that America owes like $18 trillion, right, the amount of money that they have is just not there. They wouldn't be able to afford that. It would crash their economy. So that's how scarily close the world got at that time to complete financial meltdown and going back to a bartering system. Essentially, we were half an hour away from financial Armageddon. Yeah. Now we're in a different situation. We have learnt from then what to do. And one of the things that we've learnt is that this bank needs to do this. Lots of it. And push that money into the economy. And governments need to get out of its way and just, all right, So when the US government said we need to spend $2 trillion, $2 trillion, all right, to support just consumers and small businesses, they said, yes, let's do it. Done. All right. Then the problem came when they said it's not enough. All right, we need even more. And then the government started to say, well, we don't think there's yeah. And they're still in that state at the moment. They agreed on $600 checks. All right, that's nowhere near enough, but it was something. Yeah. But they haven't actually signed off on them. All right, so they've got that as a problem coming up very soon. So that's kind of how the banking system works. Yeah. Yes, absolutely it does. Yeah. Yes. All right, and we talked about that, how it could then lead to the value falling. Yes, absolutely. But it's one of those situations where if your house is on fire, you're not going to worry about the price of water. Any problem like that that occurs in the future, we'll deal with. But at the moment, we've got a house on fire, and we need to do everything we can to stop it. Because otherwise, we've got no house at the end. And nobody likes sleeping in cardboard boxes. Not even Isaac. And he's tried. All right, okay, ladies and gentlemen. Now, where do we go from there? I need to... So it looks very complicated, but really it's not. The big thing you need to understand is that at the heart of all of the financial center of the economy is the central banks. Yeah? The Reserve Bank of India, the Reserve Bank of Australia, the Reserve Bank of New Zealand, the US Federal Reserve. Now, America is slightly different because it's so big, their economy, that each state has its own central bank. All right, and then there's another one that's overall the whole economy. So it's a little bit different. So there is a San Francisco central bank, for example. All right, that leads quite nicely into this. According to the marketing department, one of my favorite topics. Right, the stock market, otherwise known as the share market, otherwise known as a very, very, very old word, bourse. Now, I don't know why, but it's very, very, very old. And the reason why I've included it again is just in case somebody asks you. Just in case it turns up in an exam somewhere. I don't think it will, but you never know. Now, you're all familiar with the stock market. You've seen it on the news. It gets talked about quite a bit. Okay. However, all right, whether you get confused with that word, share market, what's the share market? The stock market. It's the same thing. All right, the word stock and the word share mean the same thing. So whether you're talking about the stock exchange or the stock market or the share market, they're all saying the same thing. All right, so again, it's because these are really old businesses. They've been around for hundreds of years and they used to be called different things back in the day. So unfortunately, yes, you're going to need to learn a little bit more language with regards to them, but that's okay. What does the stock market do? Well, there's a whole science behind what the stock market does, and some of you have been in the CCA, I think, that I ran about the stock market. No? Okay, maybe not. You might be aware that I ran a stock market CCA, and in that the students were investing in the stock market virtually. All right, and making money, okay? And some of them, there's one kid whose name has escaped me, and he made an awful lot of money in his virtual portfolio by accident. He did exactly the thing I told him not to do, all right, which was invest all of his money in one company, all right, And then, unfortunately, what happened is the one company that he invested all of his money in took off like a rocket. And it is still going up, to the extent where the owner of that company has now become the wealthiest man in the history of the world. He has just recently passed Jeff Bezos. All right, Elon Musk and Tesla Motors is the company. And for reasons that I'm still not 100% comfortable with, right, their share price has just been taking off like a rocket. There is also a little bit of insider trading, I think, that's been going on, and a little bit of dodginess. To be perfectly honest, I'm a little bit nervous about it. But that is one that we watched. We did some videos last year about the stock market, and we posted them in the YouTube channel. You can look those up should you wish. And marketing department filmed some of the sessions, and that went somewhere. Okay. And the marketing, and we're now doing a stock market one for the open day in February. I will be apparently running an introduction to the stock market for the parents and their children, I think their children, who are looking at coming to the school. Right, so that should be fun. Okay. So the stock market does a trade in or exchange in stocks or shares. Again, interchangeable words. A stock or a share is, you can see it, this idea here, part of the ownership of a business. All right, so if you like Amazon, if you like Tesla Motors, if you like Apple, it is possible for you to buy their shares. At the moment, they're very expensive. So you'd need quite a bit of money, to do so. But if you had that, you can. And you would then be what's called a shareholder in the company, which in theory means that when they have their AGM, their annual general meeting, they have to ask your opinion. And you give your opinion about whatever business plan that is that they are suggesting at that time. Yeah? Now, owning stocks and shares is a bit like gambling, right? Sometimes they go up, other times they go down. So when I talk to the students about it, one of the things I did say to them is don't invest money you can't afford to lose. If this is the money that you have set aside to buy your groceries, don't invest it in the stock market. All right? Okay? Now, that makes absolute sense, I think. However, there are still, even today, a large number of people who borrow money, who take out loans to invest in the stock market. And that is the riskiest thing to do. Because if your shares go down, not only have you lost that money, you also have to repay it with interest. Right? That's called leveraging, and that's not a good strategy, I think. But people do it. Okay? Yes, well, exactly. Now, why do we have this? Why do we trade in the ownership of business? Again, this is from businesses from long ago. Right? One of the things that they do is it creates confidence. Businesses are able to find and facilitate investment. Because you've bought some shares in Tesla Motors, it means Tesla Motors have that money. And they can use it for their research and development and come up with a new spaceship that explodes on takeoff. Yeah? All right. All right. It is about raising share capital. All right. Raising money for investing in your business. It means your business can grow. Right? Nexus might want to do a Nexus in Indonesia. Nexus might want to do another Nexus in Thailand. I don't know. In order to do it, they need the money to do it. So they might issue shares to do that. Now, the previous school that we worked in Thailand, they listed on the stock market. Right? And they raised a lot of money from doing that. And then the entire company got bought out, whole lot. And they got very quickly delisted from the stock market because he didn't want to lose control of the business. Yeah? You might also see in the news there's something called an IPO. That's called an initial public offering. That's when your company hasn't listed in the stock market and then they do. That's the first time they're listing. All right, that's what that is. Okay, now, ladies and gentlemen, we're going to finish there for today. You've done some fantastic work. Please, pink stuff for your desks, blue stuff for your hands. Pay attention to the emails that are going to go around, I guess, later on today about whatever it is that the PM says. Otherwise, as we'd say in the land of my birth, they call it up, which means goodbye for now. Thank you. And we'll stop the recording.